I'm going to talk about one of my favorite topics, which is why passive investing is a scam, or why I think it's a scam. Of course, so many other people are saying I'm nuts. How dare I say those crazy things? I'm like, well, that's kind of the way I feel. If I feel this way, I'm gonna say it. So I have a whole like web address, like you could do like multifamilyos.com/passive investing is a scam, or maybe even the whole passive investing is a scam.com. I don't know if we bought that one or not. But the thing is, I see it bandied about so often. So the first one, so that you can see it. Okay, only the people at the top are the ones who make any money. What does that sound like? Does that kind of sound like a pyramid scheme? Well, probably because it's pretty darn close. Without the SEC actually trying to figure out what a Ponzi scheme is, a la Bernie Madoff. But the people at the top are the only ones who make the money. They bring people in, and then they bring other people in. And you're looking at a typical pyramid. At the top are the two guys who got the deal put together. And they're the ones who are going to be making all the money. The people below them, maybe the GPs, they bring them in like, hey, we're going to make you a GP in this deal, but you got to go out there and raise some money. And then going to give you a cut. Illegal. Based upon how much money you raise. Illegal. So in that regard, you get down to the people on the bottom, the passive investors. So the people at the bottom are the ones who end up getting nothing. Like right now, you're seeing a lot of these syndicated deals going south because, you know, they're getting cash calls. They didn't raise enough money. There was never enough powder to keep everybody dry. I'm telling you right now, I'm seeing it, and those people at the bottom are the ones who are going to lose everything. The people at the top, well, they already made their money with the acquisition fee. So number one, why I see passive investing in this whole model is a scam is because the only people who make money are the ones at the top, okay? That's number one. Now, number two, what's the second reason why I think passive investing is a scam? And you're going to love this one because we're seeing more and more of this happen all the time. Now, of course, when they were rolling out their investments, this would never happen. Never happen. But here it is. If the investment has the ability to make a cash call to all its investors, you are not in a passive investment. And I am seeing this now. I mean, I've students from, been in this business for years. They've worked with a bunch of different investors. They worked with a bunch of different gurus. They've even invested with different gurus. But I'm telling you right now, folks, they are now getting calls from those gurus asking for more money. They're called cash calls. Look, I'm not going to sit here on this high horse and preach like I didn't have to do it myself. I have had to call on investors to pony up more money to keep the deal going. It is not a fun position to be in. And so in this regard, I'm telling you, those people had to step up and start to help run the investment for many of these gurus. One of my students is doing it right now. So if there's written into the operating agreement that all investors may have to put more money in down the road, if the company is going to be short cash, I'm telling you right now, that's not a passive investment. All business requires cash. This is a business. All businesses require cash. Once a business is out of cash, it's out of business. And when you get that cash call, it's usually very late in the game because nobody wants to make it. And they hold off as long as they can. And they finally said, we can't take it anymore. If we don't ask for more money, we're going to lose the property. And so when you get that first cash call, that's when people realize, holy cow, we're in trouble. And usually by that point, it's a foregone conclusion. I'm watching it play out with a student of mine who invested with a guru that everybody knows. As a matter of fact, this guru just got sued for $1 million for fraud. It's baloney lawsuit, but whatever. And that guy is getting a cash call for that property. Oh man, that's a tough day. So if the property you can have to put up more money. That's not a passive investment. And okay, number 3 is, in order for the passive investors to raise the money to get into the deal, they have to break the law. Now let's take a look at what I'm talking about. I am putting together an investment right now with students of mine, and we're doing everything right, crossing all our T's, dotting our I's. Securities attorney. We got Nate Dodson and Richard Robinette of Crowdfunding Lawyers. Great guys, really good guys. And in one of the documents that Nate sent over to me, basically lists out all the things that you're not supposed to do as a cash investor in a deal. He lays it out for everybody, and everybody has to sign off on it. And then this becomes part of the PPM document. And in that wording, it says you cannot receive compensation based upon the amount of money you raise from your general partner. Clear as day. That is a violation of the securities law. What do these syndicators do? They bring on people who are capital raisers. They even give them fancy titles with 2 capital letters, capital raisers. And they say, you raise the money, we're going to give you a cut of it. That is in violation of the law. It is. Don't try to color it any other way. As Nate Dodson always says, if it looks like a duck and it sounds like a duck, it's a duck. That's exactly what's going on when you are paying your capital raisers for doing nothing more than raising capital. They have no other function in the deal. That's a violation of the law. And these guys are in big trouble. But this is the way that many of these syndications work. These are why I say passive investing is a scam. Like, oh, we're all passive investors. We're going to make multifamily millions. But the first thing you're going to do is break the law. That's not the way to do business. So those are the 3 ways. Now I have a bonus in here. And this bonus that I have is an expression that I have, especially on this deal that we're doing right now. If you pop the champagne after the sale closes, you might not be involved in a true real estate deal. And here's what I mean by that. The deal that we're doing, we don't make a dime. We close that deal. We bring in all the partners. We put it all together, and we start down the road of that real estate investment. We haven't made a dime. The whole deal is structured so that we don't make any money until the capital event. It's a renovation. It's a repositioning. So all the money that we're raising, it all gets plowed back into the deal. We make our money on the back end. If you see these investors popping the champagne at a closing party because they're all getting nice acquisition fee checks, then I'm telling you right now, folks, that's not a true investment. A true investment is, you've heard it said many times about, you make your money, you make your profit on real estate when you buy it. You realize the profit when you sell it. And if the property never gets sold or you can't make it to the finish line, you don't get anything. You lose it all. But these guys, these passive investors, a lot of them make all the money they're ever going to see at the closing table. That's not a real estate investor. That's a broker. Okay? So if that's how your GPs make their money, you're in a bad deal. And the way we're structuring our deals is that nobody makes any money at the closing table. Nobody gets a preferred return because the money is better off staying in our company to turn that property faster. Kind of sounds a little bit like Warren Buffett, doesn't it? The guy he's made one distribution in his 57 years of being in business. And he even says that I can't believe I did that. I must have been in the bathroom when they took that vote. And because all the money gets plowed back in, and that the value of that company has skyrocketed. Wouldn't you like to be in that position as a real estate investor? Well, you can be, but you can't if you're getting into these passive investments where you pay taxes on all the distributions, where you pay taxes at the end when you sell the property, and then you have to go out and find another investment 5 to 7 years later because that one just closed. How would you like to stay in an investment that just perpetuates, continues to grow? You can 1031 up to the next deal, or you can pull your money out and call it a day. That's the type of fund, that's the type of investment that you really should be looking for if you're a true real estate investor, because that's how we make our money in this business. Okay? That is it. Anybody have any questions? Be Tom. That is it. I just want, I have to tell you, when I see something that's wrong, and that passive investing, and I actually have a calculator on my website. If you go to multifamilyos.com, we've actually created a calculator, and you can figure out, hey, how many units would I have to own for me to replace my income as a passive investor? Or how many units would I have to own if I was the sponsor and I went out and found my deals on my own? And that's the big difference. Listen, I'm telling you, there are times when owning and operating a property and putting together a syndication and you investing in the syndication is a good opportunity. There absolutely are. But if you're doing it because you think this is what you have to do to become a multifamily millionaire and great, huge investor like Donald Trump, you're never going to get there with these syndicated passive investment deals. They just don't work that way. Okay, so there it is. That's all I got for you today. I will be reaching out to you soon. We've got our Florida event coming up, but we also have our first investment in a long time. This one's a hotel to apartment conversion. We may open it up to other people, but we might not need to, because we're pretty darn close to raising all the money that we need without having to tap anyone else on the shoulder. But we have 3 other properties right behind it, and that's what we may have to open up for then. But so keep informed. We'll keep watching my videos. I'll have my partner Dave Peters on one of these times. It'll be a lot of fun. All right, so good to see you all, and I'll talk to you soon.